Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the charts for Bitcoin. We're going to be taking a look at a couple of things, specifically on the smaller time frame and the larger time frame as well, getting a good idea as to whether or not we think the bottom is near and what might actually happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now, if you have not yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find on down there. So why not go ahead and check it out today? Okay, guys, let's waste no more time and let's get right on into this. So we're going to start things off with the hourly chart. This is the kind of thing that I would expect to play out over a couple of days. So we have been tracking a little bit of a corrective move coming up here, right? So this is a fourth wave correction. I had this kind of projected out at about 33,500, although that's getting less and less likely to come in at this stage. Unless we get some kind of surge next week, I wouldn't necessarily think we're going to go as high as this right now, but it is still a possibility on some kind of large ABC structure. And we are currently tracking a zigzag, but this could actually end up being a five-wave move where we end up with a 53535, and that could take us towards this 33.5, maybe ever so slightly higher. Okay, so just keep that in mind, that we are looking at that move there. Now, where we are right now, we have a potential five-wave move going down. Okay, so we've got 1, 2, 3, this being 4, and potentially 5 coming down lower. Now, the problem that I have with this is we've got a 5-wave starting point. We cannot really have 5 waves afterwards. And even when I start to look back at these waves, having 5 waves here, they don't really make a lot of sense. So I'm thinking this is the start of a move up, and this is actually likely to get invalidated. Invalidation of that 5-wave move down comes in here at $29,850.51. So I would anticipate this is actually some kind of ABC structure, and we are actually looking for a 5-wave structure moving on up. So 1, 2, 3, 4, 5 of some kind, and it should actually be a pretty significant one as well. So we're keeping an eye out on that, and we should be looking to move on up. Now, if it's a zigzag pattern of 535, then we're looking at going to about $31,000. And if it is a 53535, as I said, we're probably looking at moving closer towards the $33,500, maybe a little bit more than that. Okay, so that kind of is our fourth wave correction. I expect this kind of stuff to play out, I mean, this 33,000, it should hopefully happen by next week, but timing is really, really hard to get, and it's not something I'm necessarily going to get right in this video or any video, because timing is just something I just do not do. However, that is the most likely and the most probable move in my opinion. It's taken a long time of just sideways trading here, and again, we might look at this in many different ways, but essentially this complex fourth wave correction, I'm hoping would actually be completed soon so that we can then move on down into the fifth wave, which would take us down into our lows. Now, on that note, this 1 hour stochastic RSI has plenty of room to grow. So does the 4 hour, and so does the 8 hour. So progression to the upside is something that we can talk about, and something that is most probably going to happen. It will then actually put us in a really nice place for our daily chart to be heavily overbought on this fourth wave correction before we drop down into our final fifth wave low. Now, this is actually a part of a fourth wave play on a bigger scale, which will be interesting to see how that one works. But essentially, this is actually going to be taking us down to about $22,967. Okay, that's going to be the low that I've kind of got scoped out here for Bitcoin within that that fifth wave. Now, that fifth wave also coincides nicely with a much larger correction, which would be from here as a, let me grab hold of this, an A, B, C move. Okay, so again, you can kind of see how these things are tying together. This essentially is a 335 correction. Okay, so basically we're talking about a 5-wave drop right at the very end, and that is the end of the corrective move and the end of the corrective structure. Very important that we understand what patterns are being in play here, because this helps us understand whether or not 22,900 is going to be the bottom, or whether or not more room to go down, So essentially a 3-3-5 structure is one wave complete. And then of course, we could see another 3-wave move up and then another 3-wave move down later. Those are possible, but a significant bounce should be seen at 22,900. Right, now let's actually spend some time on our weekly chart talking about how I get there. Okay, so as I said, right, we have that ABC structure coming on down into that range, and I want to spend a little bit of time here just talking about the importance of measuring this correctly, right? So if I do not have my chart on logarithmic like this, and I go ahead and I put a Fibonacci tool from that bottom to that top, and I move this fib over to here, you can see how this suggests $12,000. This is because the chart is not on logarithmic, but the Fibonacci tool is on logarithmic. Okay, right down here, it's trying to do things on logarithmic scale. So when you turn logarithmic scale back on again, and we then go ahead and run this back up, you'll start to then be able to pull this fib right back up to where we were, and you'll notice it no longer marries up with these prices. Okay, so you're thinking, okay, well, something's clearly not right. And that's correct, it isn't right. So you have to then readjust this and move this off over here with it all on logarithmic. So my chart's on logarithmic scale, and my Fibonacci retracement tool is also on logarithmic scale, as you can see just down here. So as a result of this, what we can then do is actually get a decent projection of $23,000 for our price for Bitcoin, right, on a 1-to-1 ratio. So it's important that we understand how we get there. How do we get this 1-to-1 ratio? It's possible, of course, that this goes a little bit shorter. It's possible that it overextends ever so slightly, but this is going to be around about the area that you're going to expect things to happen. But don't just take the Fibonacci retracement tool as a gospel, and that's what's going on there. Obviously, if you're in the crypto space and you haven't got your charts on logarithmic scale, but you've got your tools on logarithmic scale. In fact, even if you're not using logarithmic scale, I highly recommend that you turn that logarithmic scale on. It makes your analysis easier, and everything is actually calculated out much more efficiently for you. Okay, so it's not so important if you're trading things like Forex, right? I mean, the price movements, the volatility isn't as much, so you don't need to have it on logarithmic. But for cryptocurrency with this amount of volatility, you absolutely need to have the logarithmic scales turned on. And of course, when you do that, you're going to want to make sure that you have your fib tools also on logarithmic style as well, right? So you can get your calculations correct. If I actually draw two fib tools here, right? I'm just going to draw these side by side. One has a logarithmic scale on, okay, and the other one does not. Now, in this one here, if I go ahead and turn off the logarithmic scale, you can see here I get very, very, very different results, okay, based on these two Fibonacci tools. One has logarithmic scale on, that's the one on the left, and the one on the right does not. So my chart is on logarithmic, but the tool also has to be on logarithmic. If it is not, you're going to get very different results and you're going to get misleading information. Okay, so always make sure your logarithmic chart, your logarithmic charts have logarithmic Fibonacci retracement tools. Okay, very important. Okay. Right, with that said done, we'll park the whole fib thing for a second, and we're going to jump into the Bitcoin to USD pair from Bitstamp because it has the most amount of data. Okay, if I just bring this back down, this is the one that I've been using to analyze the cycles for Bitcoin. And whilst we're here, we are going to then come over to my indicators, and I'm going to throw on a 200 moving average. Okay, so a weekly 200 moving average, right? Now, why is $23,000 a 1-to-1 ratio very important when we consider 200 week moving average, a simple moving average? And if I grab hold of, can I find it in here? Maybe it's this one. Yeah, this one. Okay, I'm going to highlight a couple of things. One, we've got the pandemic crash right there. Okay, and again, we actually went below the 200 moving average there, okay, and it took a pandemic to do so. Over this side, you can see that we actually just bounced from that 200 simple moving average, and that is the bear market low for 2018. We come over here, we can see again now, it's hard because we haven't got a huge amount of information. I'm going to focus in on this one, and this is actually on the journey out of the 2015 bear market low. It's possible that this 200 weekly moving average was higher than the actual wick here. That's a possibility. It was also possible that it was lower, but we do not have that information. Okay, so understand that this 200 simple moving average is absolutely key in understanding that we were basically coming to this level and bouncing from it. Now, when we review $23,000 over where our current position is, it also coincides with our weekly 200 moving average. And as a result of this, this is going to be a good area for a strong bounce up and potentially going to be our 2022 bear market low, okay, for BTC. And this is obviously counters, what a lot of other people are talking about when they have their fibs indicating $12,000. But we've established that $12,000 Bitcoin is based on incorrect calculations on the fib tools. Now, if you're to do it on logarithmic and you are using your charts in logarithmic and you've got your fib tools in logarithmic, then sure, you could do it that way, but it would be, I would think, irresponsible to think of such a thing like that. Okay, those numbers are just not really viable. And again, you could apply the same logic anywhere on any of these charts, of the history of like Bitcoin, for example, and do it on with logarithmic scale turned off, and you'll notice that the bear market lows have been significantly higher than that 1-to-1 projection when the logarithmic scale is turned off. So make sure you have logarithmic turned on, and you'll see everything coinciding nicely with a 1-to-1 ratio, and specifically with this 200 weekly moving average. But maybe the simple moving average isn't for you. Maybe you like the EMAs. Well, the EMAs also show us a really good key technical indication here, and again coinciding nicely. Now, if we take a look at the history, we close below the 20 EMA and we go down and just close below the 55 EMA. Okay, that happened back in 2015. It also happens over here in 2018. We close below the 20 EMA and we move down and close below the 50 EMA before getting the reversal. Again, we've closed below, currently closed below the 20 EMA, and we are working our way down to closing below the 50 EMA. Again, all of these moving averages, whether they are simple or exponential, they all add up to the same conclusion. $23,000 is approximately going to be the bottom of this bear run. Okay, so whether you believe in Elliott wave theory, whether you believe that simple moving averages are a really good indication, whether you believe that a 1-to-1, between movements and bounces is likely, then you have that as your backup for $23,000 as well. Maybe exponential moving averages are also your game, and that also backs up this range of about $23,000. It is, of course, possible that you slightly overextend. I'm not saying that $20,000 isn't likely. It is possible. I just think that with so many people expecting it, I think it's unlikely. This is something that we see all the time with the amount of long positions that get opened up on Bitcoin. The market will go the opposite way because pockets of liquidity are opened where whales can take advantage of retail investors. So just be open-minded here, guys. I think $23,000 or around $23,000 is likely to be at the bottom here for BTC. Guys, if you found this video useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.